Good morning, everyone, and welcome to today's webinar. We are going to be talking about Zolo mortgages. So Mahir will be joining us shortly. Let's give it 5 minutes and then we'll get started. So we'll be back at 11:05. I'll type that in the chat as well for those of you who are just joining. But yeah, let's get started at 11:05. We'll be right back. Thanks, guys.
Unmuted. I am muted. Can you hear me now?
Good morning. Yes. Hi, Mahir.
Hi, how's everyone doing?
Good, good. So welcome everybody to today's webinar. We are going to be talking about Zolo mortgages. So I do have Mihir joining us today. Thanks Mihir for being here.
No problem, my pleasure.
And I know that you wanted to take over the screen. You probably have some slides prepared. So I will hand it off to you so that you can introduce the newly launched Zolo mortgages.
Perfect, thank you very much. Let me know when you can see my screen.
Yeah, I can see it.
Okay, great. Thank you so much, Jane. Good morning, everyone. My name is Mihir. I am Principal Mortgage Broker at Zolo Mortgages. If you weren't around for the previous one, which I think we did less than a month ago, I will reintroduce myself and Zolo Mortgages. Zolo Mortgages did exist previously. It was a older business model run under a franchise model with Verico. Things with the older brokerage didn't work out for whatever reason, so Zolo Mortgages closed down about 2 years ago. Earlier this year, we actually reopened Zolo Mortgages under an independently owned business model. So Zolo Mortgages is now direct, working with all lenders and originating business ourselves under our own name. So we're no longer Verico, we're just Zolo Mortgages. I'm new to this whole thing. I actually wasn't with the previous Zolo Mortgages. I'm the new broker, principal broker here. So you will notice some changes if you did work with Zolo Mortgages previously, which some of you may have. If, as I believe most of the agents at Zolo are new to Zolo, you are new, then you won't notice any changes. Well, welcome to Zolo Mortgages. I'll give you a brief rundown. This slideshow is from the last time we ran this webinar, so I'll actually do some of the same things. I want to change some stuff around about how we are doing stuff. Let me turn on my do not disturb so we don't get some notifications on this laptop. I'm going to change some of the topics that we discuss on the fly, so there may not be a slide for it. It's just going to be me talking. So let's talk about the mortgage news to start off with. If you are familiar with the qualification rates, they dropped down to 4.79% about 3 weeks ago. They are staying there for the time being. So if you did have anyone who was pre-qualified prior to a month ago, you would want to get them back in to see how much more they can afford. Basically, it means a little bit more affordability. It could be borderline affordability. So here are the numbers. For a lot of clients, it's the difference between winning multiple offers and not winning multiple offers, depending on their qualifications and debt ratios. So, bring them in. We are really, really quickly growing our base of mortgage agents here at Zolo. So I want to connect you as real estate agents with mortgage agents and have you guys, basically running a team in real estate, and you can bounce off each other, whether it's ideas or clients or, getting updates on the industry. So based on preferences, I'll find a connection for you that will work great. So, if you speak Farsi and most of your client base is Farsi, we have Farsi agents. If you speak Hindi, Urdu, Punjabi, Arabic, we do have agents that cover all those languages. And if that's your preference, if the majority of your client base speaks a specific language, let me know that. I don't know if I have my contact info in any of these slides. Maybe I do. Maybe I don't. But basically, I will put it up at the end. My name again is Mihir. You can, why don't I put this in here right now so that everyone can see? Email me and just say, here is my deal, or here's my client. And also mortgages@zolo.ca. So I have access to both of these email addresses. Email at either of them if you have any questions or if you have any clients that you'd like one of us to pre-qualify. Email through me, and then I will assign to the team. That's how we're working right now. The way that Zolo Mortgages works is right now we're originating a lot of business online. So we're not necessarily working the same leads that you are. We're working with leads that are sort of sourced online through Zolo, but not necessarily looking for real estate online. That's why having that connection with a mortgage agent will be fruitful for you as a real estate agent. If you work a specific area and that mortgage agent gets a client in that area, um, you can obviously feed off of that. Let me just look through a couple of things. I was away for 2 days and my email and text messages are blowing up today. So yeah, that's one part of it. Um, let's talk about, oh yeah, there was one other thing that I wanted to talk about. Let's talk about this. I think we talked about the affordability. So your clients do have slightly higher affordability today than they would have a month ago, just to reiterate. And why are we not going to the next slide? Oh, there we are. So let's talk about current rates. We are working with rates going down quite significantly. We have 5-year and 3-year at around 1.7% posted. That means that we can still buy down to win your client's business. 5-year fixed somewhere around 1.8 posted. We can still buy those down as well to win your client's business. So depending on how qualified your client is, we can actually buy those rates down, and we can go from there. Let's go on to the next one. Does everyone qualify? Okay, so let's talk a little bit about mortgage qualifications and how we do this stuff. We are basing your client's qualifications on their GDS, TDS ratios. That's their gross debt and total debt. So if they have existing debt like car loans, credit card payments, unsecured line of credits, we have to use those as well as their mortgage payment to qualify your client for how much they can afford. So does that mean that everyone will qualify? Essentially, no. Not everyone will qualify, especially in today's markets. It gets a little bit tough, but we have ways around situations. You leave the qualifying to us. If we can't do something, then we will refer you to someone who can. Cool. Rates are based on your qualifications. I'll leave that there. What should I tell my clients about their mortgage? Yeah, so basically one of the biggest barriers for real estate agents when they're speaking to their clients is asking about the mortgage qualification of your client, especially if it's a buyer and you're trying to meet them for the first time or screen them over the phone. What question should you be asking? Without being too aggressive, it's really easy to ask them, have they been pre-qualified or would they like to speak to a mortgage specialist? Very specifically, do not ask them what price range they're comfortable looking at. Clients are going to be pulling their numbers out of their, wherever. They have no idea what they can afford. They have no idea what the minimum down payment requirements are for a home, or even what the minimum income requirements are to carry a home. So don't ever ask them what price range they're looking in. Use this online mortgage calculator to really go through affordability. We can go through this in a bit. Give them a real idea of a home they can afford and refer them to a mortgage specialist as soon as possible. So we really want you to start referring your buyer clients, the active buyer clients, to us at Zolo Mortgages. Previously, when it was just me, it was impossible for me to keep up with the workload. But like I mentioned, we are growing aggressively. In the next week, we're adding 2 mortgage agents. And then the weeks after that, we have a goal set of hiring between 3 and 5 per week. So really, really aggressively hiring on the mortgage agent side.
Here, so with respect to that, referring clients to you guys right away, we do have a question coming in here that if that's the process, sending them to you right away, or should we be asking them to go to their bank first?
No, send them to us. The reason I would rather they come to us is because we can give them an answer in 20 minutes. Like that's the worst case scenario. With a bank, you have to set up an appointment. You have to go there in person. They're going to start selling you other products that you don't need. When it comes to Zolo Mortgages, we only focus on the mortgage side. Our goal is to provide our clients with as much information up front as we can to get them a good, let's say, educated decision on their purchasing power. It also helps us build the relationship with the client early on. When it comes to closing business later on. So we would rather you refer it to us, please, so that we can work with you symbiotically to close the transaction.
Perfect. So we do have some questions coming in that are situational, which I'll address maybe at the end so we don't interrupt the flow of your presentation. But there is one that I think maybe relates to what you're talking about here, that when we do refer clients to you, is there any fee involved?
There's no fee involved, but there is a sort of like a finder's fee, if that's what you mean. We do have, for the real estate agent that refers us business, we're giving 15% of the funded deal amount as a finder's fee to you. So there is that incentive to you as a real estate agent to refer Zolo Mortgages business. Regardless of the way that we work the transaction, whether it goes to one of our preferred lenders or alternate lenders, what have you, we will still give you that 15% on the finder's fee amount of the funded deal amount. I should let that.
Perfect. So the client doesn't pay a fee, but
No.
you do give out a referral fee to the realtor. And the question here is, even if that's a Zolo lead?
Yeah, even if it's a Zolo lead, any lead that you refer to us that we can close, it's 15%.
And then is that 15% of the funded deal amount, or is that 15%? Where's that coming from?
15% of the funded deal amount. That's right.
Thank you.
Yep. No problem. Okay, so I will keep going. Let me just see, where are we in the flow? Let's keep going with this one. What should I tell my clients about their mortgage? I think one of the things I've learned really quickly and really sort of harshly is that the average person has almost no knowledge of the mortgage process. They will approach you and ask you questions that are so elementary that you would, really be surprised at their level of knowledge. So when you're speaking to your clients about mortgages, you really have to assess their, let's say, pre-existing knowledge of how the system works, especially if you're dealing with someone who's a new immigrant, someone who's maybe newer to Canada, first generation Canadians. The knowledge isn't there. So really how you speak to them is important. Don't use big words. Try to keep everything, let's say, conversational. And you want to start with the basics. So minimum down payment requirements. I don't have a photo for this. It would have probably helped, but what we can do is hop over to the mortgage calculator so I can give you guys an idea. Let's hop over here. So this is the Realtor.ca mortgage calculator. There is the affordability section, which I will go into a little bit later, but the payment calculator is what I'm going to go over here. So there are essentially 1, 2, 3 scenarios that you should pay attention to when it comes to minimum down payment. The first cutoff is just below $500,000. So if you have a purchase price of just below $500,000, the minimum down payment amount you can place on a property is 5%. If that amount goes above $500,000, it is 5% of the first $500,000 and 10% of the amount above $500,000 and below $1 million. So let's do 501. Actually, maybe we should do 525, so that's more significant. So you can see it's not 5%, it's 5.24%. If your client is purchasing a home above $1 million, let's just see what happens here. The minimum down payment amount is 20%, okay? So if you're asking them questions like, what is your down payment amount? And they say 20%, they're really not answering your question. The question should be 20% of what, or what are your available cash funds? Based on your cash funds for down payment, you can work backwards as to potentially what is their max purchase price. That goes back into affordability calculator where it does ask you things like, what are your down payments available? Okay, anyway, that's one thing. Let's go to, oops, I went to the wrong screen here. Give me a second.
So Mihir, maybe I'll just interrupt you here for a second. We do have some questions coming in just about that finder's fee. So
Oh,
could you
sure.
give an example or a breakdown using the example of maybe a $500,000 mortgage? What would that referral be? That referral fee, what would that be?
Okay, sure. I'm gonna have to pull up a calculator.
Sure. Just so that it's understood how it's calculated.
Yep. So how the brokerage gets paid on the mortgage side is we get paid by the lender, usually around 80 basis points. So 80 basis points, why don't I pull up the calculator itself? Calculator, sorry. Let's say you have a $500,000 purchase. You multiply that by the 80 basis points, which is 0.008. That would be how much the brokerage gets gross. From this, you would get 15%. So 0.15 is $600. So good amount. 600 bucks for a $500,000 commission is not bad.
Awesome. Thanks for that. I think that's super helpful.
No problem. Are we getting a lot of questions on that referral fee or?
No, I think that will probably address most of them. If you guys do have questions, feel free to keep asking. I know that I've jumped over some questions that are situational, which we'll save to the end so that we can really jump into those. So keep the questions coming. Thanks, guys.
Cool. Okay, so let's go back into presenter view for this one. Okay, qualification is based on current debt. 90-day history of down payment is required. I don't want you guys to get too much into this. Just mention this offhand. Basically, the purchase date, the closing of the transaction may have to be pushed if all of their funds are not available in Canada or if they have some major deposits that we just don't want to disclose to the lender. But 90 days history of down payment and some other stuff is required. New to Canada clients are eligible with multiple programs. If you have clients who are permanent residents, or work permits, refugees, we do have programs available for them. We also have ways for them to avoid paying the non-resident speculation tax, the 15% foreign buyers tax, if you're aware in Ontario. Just refer them to us. Let us figure out the details. We will keep you on the loop, but just keep in mind that we've dealt with a lot of these clients before. We understand where Zolo's demographic really is in terms of client base. So let's say the average person making an inquiry on Zolo is most likely new to Canada or is relocating. We get a lot of relocations. We can help those people. And don't limit the base of clients that you refer to us to your buyer clients. If you have lease clients that are looking to buy in the near future or just said like, hey, look, for now I need to rent a home, but in the near future I am looking to buy a home. Refer those clients to us because we can get them on the path to closing that buyer deal with you. Okay, so just a little bit more. What is mortgage insurance? It's important for you guys to know this because what ends up happening is a lot of the mortgage questions end up with the real estate agent. And it's important for you to understand the basics of mortgage insurance. So we have essentially anything below 20% requires a mortgage insurance payment. Okay, so we'll go back into the realtor.ca calculator and I'll explain this to you. We'll use our use case of, let's say, $500,000. So here we are. Your $500,000 purchase, your minimum down payment is $25,000. But then you have this element here called mortgage insurance. This is a plus add item to your total mortgage amount. So you can see $19,000 was added in mortgage insurance to the loan amount. I'm trying to keep the terms as simple as possible here. The principal, the loan amount of the mortgage. So you would have expected $475,000 as a loan amount, but because of the mortgage insurance premium being added, it's $494,000. That mortgage insurance premium increases as your down payment increases. So you can see in this scenario, 10% down is $14,000 in insurance. 15% down is $12,000. And then you'll notice 20% down or higher, there is zero mortgage insurance. So we call that insurable. It still means that there is an insurance policy on it. It's just being paid by the lender. So we try to push as many clients to this level as possible if they have the funds available. But if they don't, we can still qualify them at this. The detriment of having a mortgage insurance payment is that it limits your client's ability, purchase power, let's say, because this $19,000 is being added onto your mortgage. And that, reduces your purchase price essentially almost by, pretty much the same amount. So instead of purchasing something for $520, which they may have won in multiple offers, they're only allowed to purchase at $500. Just as an example, that's just a ratio that I'm using here, but there is a issue with, affordability and mortgage insurance. The amount varies, but is not paid out of pocket. Added to mortgage principal. I think I explained that there. Client does have to pay PST on mortgage insurance at closing as part of the closing costs. So what I mean by that is in terms of the upfront cost, your client will not be paying $19,000 out of pocket. That $19,000 will be added to your mortgage amount. But the PST, the provincial sales tax on that 19%, which I think works out to 8% of the $19,000, has to be paid on closing by your client. And it's something that will be added to, let's say, your lawyer's fees, your appraisals, if required, any other closing costs that you can think of, inspections. That's something else that they have to budget for. A lot of the lenders that we work with now say we want to see 1.5% of the purchase price on top of the down payment for closing costs. So when you are speaking with your clients, that's a good number to use. Let's say they have 5% down available. Tell them to wait until they have 6.5% available so that they can actually close on the transaction. Or if they're able to save up to 6.5% by closing of the transaction, then that works as well. Is there any way around this? The only other way around it is to not pay mortgage insurance by putting 20% down. What if my client doesn't qualify? Lots of people don't qualify on the AAA side. And by AAA, I mean the insured mortgages, the insurable mortgages. The solution is not fraud. I kind of went over this the last time we spoke about it, but I want to make this absolutely clear. Zolo Mortgages does not create documents or alter documents for getting your clients to qualify for any mortgage. If that's something that your client is asking you to do, I would extremely aggressively tell them to avoid doing this. The powers that be have really cracked down on fraud when it comes to mortgage lending. And by committing fraud, your client could put themselves in a position where they would never be able to get a mortgage again. So the risk is too high. Our solution to clients that don't qualify on the AAA side is the alternate lending, the borderline lending. A lot of lenders have these buckets of credit that they're making available to clients who are borderline qualifying. So that could be they have too much debt, their credit scores are a little too low, they have some other issues like maybe bankruptcies or credit consumer proposals that have gotten in the way. And And the rates aren't that much higher under these programs as well. So instead of going for 1.72%, you're really looking at the low threes, maybe even the high twos today is what we're seeing. With Equitable Bank for 3-year terms and 2-year terms, we can do 2.97 on alternate lending. So if your client is self-employed with a high TDS and a great credit score, that's a great option for them. Flexibility in income proof and no guilt about lying. What I mean by that is, if your client is self-employed, we can use things like office expenses and add them back into income to make their qualifications even higher. So we have our ways with working with the T1s for your clients to increase their net income to a point where they can afford more. Final options are private lending, 0% loans, and other high interest options. Right now, we're shying away from the private lending option. We have too many good options on the alternate lending side to be really sending people into private lending. Private lending is really predatory. There's a lot of, you have to understand that it's interest only payments on private lending. So even if the rate is 13, 14%, they're only paying interest on that. And it's a huge amount of money to be paying if it's just interest only. Yeah, we use our customer service skills. We use our connections in the industry now, and we do have some volume that we're building up with certain lenders that gives us a lot of leeway in qualifying clients that other brokerages could not. So bring it to us and let us worry about it. This is for you as real estate agents if you need to speak with your clients about closing costs and other things. I did actually see some first-time home buyer stuff in here. I am a first-time home buyer. So you can use this realtor.ca calculator. I think this is probably the best calculator I've seen, both in terms of user interface and the fact that it's not branded with anyone else's logo on it, which is, I think, great. So let's just do a quick rundown of a scenario. $650,000 purchase. Minimum down payment is 6.15%. For amortization period, let's do 25 years. This is the industry average right now. If that's something that you guys want to take a note of when you're doing this with the client, that would be great. You can put around 1.8% for your mortgage rate. That tells you what your monthly payments are, so you can sit down with your client and discuss down payment scenarios and how it affects their monthly payment. That's something you can build out. You can see land transfer tax here. This is a really important point to be talking about. Another part of your closing costs are land transfer taxes. If your clients are first-time home buyers, they do get a rebate on these. So if you check mark the I am a first-time home buyer, you can see your total rebate here. It's huge, and it's saving your clients $8,000, $9,000 here. That's a huge amount of money. So that is the biggest benefit of being a first-time home buyer. This, as well as the RRSP loan system, which when you refer to us, we will discuss that with your clients. So here is the total amount of funds required, cash needed, right? So you can open up this tab with your client and say, when you have 6.15% down, you need this much for your PST on mortgage insurance. Your land transfer tax will be this much. Your lawyer's fees are approximately this much, title insurance. And then this is the total down payment that you would require to close on this transaction with 6% down. So it's a great scenario builder, a great way to walk through it with your clients, discuss options, monthly payments, and for them to really start getting to trust you, because really no other real estate agents are out there giving them this information or sitting down with them and explaining these things to them. Clients really appreciate that. Go through this with them. And even before you do, practice with yourself. If you own a home, just walk through it. Or if you see a potential home that your client may like, you can use this calculator and get them some information on the mortgage payments. One of the things we may explore in the future with Zolo is building in a really robust mortgage calculator onto our website so that you can use that, and it will lead to basically a mortgage agent contacting them in the future. These are all things we're discussing with the tech team on the internal side. So how are we doing on time? We're at 11:35. I want to leave some time for questions as well, because I think that's the most interesting part. We'll build out some scenarios. I'll show you how we work internally. And the next time I run this webinar, I'm going to have some details on the products that we offer, the rates that we offer, and then I'll even bring in some scenarios where of previous deals that we have funded, so that it helps you understand what Zolo is capable of. But if you'd like to start with some scenario questions now, Jane, maybe we can do that.
Absolutely. All right. So we have a question here. So if a client has a company incorporated and looking to buy a home now, has good credit score, willing to put 10% down, is there a 2-year minimum wait time before he can be qualified? I guess this is referring to somebody who is self-employed.
Maybe if they're self-employed, if they're recently incorporated, then what we can do is we can let me answer this question two ways, and I'll frame it for you. If the client is purchasing a home under corporation name, then we have programs from lenders that let us do that. We can purchase properties in a hold corporation, but the client will have to be co-signing for that hold corporation, and the client will have to qualify on income basis with minimum GDS TDS requirements that will basically qualify them for the purchase. That's one way to do it. But if the client is recently incorporated for their own income, let's say they're doing some kind of construction and they're self-employed, one of the things that lenders may require is 2-year history of your client's income in terms of a T1, NOA, something along those lines. For the time being, a 2-year requirement is not the minimum. We do have some programs where we can go in with self-employed income, with smaller history of income, and we can still get them qualified. The programs that lenders are really wanting us to make you aware of is that if you have clients who are self-employed who've been affected by COVID, lenders are allowing us to use pre-COVID income for their self-employed businesses to